Hi, everybody. Before we get anything started today, I just wanted to do some quick housekeeping here. For those of you that can hear me loud and clear, if you don't mind typing something into the chat box, just to know that you can hear us and all the audio is working, we'll go ahead and wait for a couple of those requests before we get rolling here. So let me see if I can get a couple of people to loud and clear. Okay, awesome. Thank you guys. I appreciate you giving me that info. Okay, so again, I wanted to thank everyone for taking the time to be on this webinar this evening. I am really looking forward to having our colleague Dmitry Fromlichenko from Sense Financial go over the value of self-directed retirement accounts and also explain how to use them to invest in real estate. This particular topic is really exciting for myself just because shortly after I joined the Marshall Reddick team, I actually attended one of these presentations, in a similar role that I am now, which is an advisor. And I just took so much valuable information from it that I immediately reached out to Dmitry after the presentation and set up my own solo 401k. And I'm happy to say that I just closed on my first real estate transaction within my solo 401k about 6 months ago. So it's been an incredible, experience, and it's been really awesome to learn all of the tips and tricks from Dmitry and his team. So every time I attend one of these presentations with Dmitry, I feel like I take something away, something new away. And some of you folks may think the process of using self-directed accounts or setting them up may be overwhelming, but I can tell you, with the help of Dmitry and his team, it's you can get involved in some really interesting opportunities and help set you up for those retirement years. So before we get started and bringing up Dmitry, I just wanted to kind of quickly go over, who Marshall Reddick is and what we do for some of the folks that may be a little bit newer to our company. So, in short, we are a full real estate firm, and we basically have four primary services now that we focus on. So we have our brokerage, our property management, our private lending, and as of about 2 years ago, our investment fund. So I'll kind of break those down a little bit more for you. So for real estate brokerage, we help people buy and sell, right? Whether it's a primary residence or an investment property. For our property management, 99% of the folks that do buy an investment property are going to need property management. So we handle everything from A to Z on that front. We, help landlords screen tenants. We collect rent. We disperse rent. We go over any maintenance issues that may happen, any kind of tenant turnover. We also provide all the tax forms at the end of the year to handle all of that as well. So again, everything from A to Z. And then our third service is direct lending, or private lending, which is, we have two clients there. We have borrowers and lenders. So I'll give you some examples of borrowers. There are folks that do fix and flips on properties where they buy a home, they rehab it, and then they try to sell it off. That is an example of someone who would use some of our short-term financing. We also have folks that use self-directed retirement accounts, what we're going to be discussing today. And if you want to buy a property, you actually need a non-recourse loan. You typically couldn't go to a Wells Fargo or a Chase or a big retail bank, right? That's just not something that they offer. So private lending offers that solution to be able to acquire property in self-directed retirement accounts. This is exactly what I did as well. Those are examples of some of our borrowers. On the flip side of that, there's lenders. So the same way you can invest in property, you can actually invest in first position mortgages. So you can be the lender, you can be the bank for some of those deals, whether that be short-term or long-term. And our final service investment fund. So we now have a mortgage fund in which it is basically under the same parameters of the private lending guidelines, right? We have pooled funds where we have investors put their money into a contribution that Marshall Reddick controls, and we're able to do that same kind of lending to the same type of borrowers that I was previously discussing, except most of the responsibility or all of the responsibility is now on Marshall Reddick as opposed to a direct lender in picking out specific deals. So that's a little bit more about our services, and my role is I'm a real estate advisor and realtor, And my job is to make the process of investing as seamless as possible by educating and introducing all the key players that are involved in this. So a little bit more about myself. My name is Vince Tomich, and like I said, I'm an advisor and a realtor here at Marshall Reddick. And my primary role is to learn as much as I can about each individual investor and help guide you through the investment process. So I was born here in Southern California, and I've been in the real estate industry now for over 7 years. I personally own rental property, and as I mentioned earlier, currently just closed on a property within a solo 401k. And prior to my role as an advisor, I was a mortgage lender for a number of years, and that's where I really learned the value of leveraging money, and that's what got me interested in purchasing property for myself. So the fit of advisor and doing it personally, it only helps me for those individuals who are looking to do this, because as someone who's been there before and had to connect all the dots and have all the team members coming to us makes that process a lot more streamlined. A little bit more about some of the areas we operate in, right? So our main office is located here in Southern California, in Newport Beach, California. So we have a ton of business that we do here in terms of brokerage and property management, but we're also located across the country. So you'll see here there is 16 markets that we operate in across 8 different states. You're going to see there's a green box surrounding some of these cities. These are all cities that we actually have a physical location in, or a physical presence, where we have our own agents, our own property management, etc. So this is where we're doing the bulk of our business, and where we're able to have the greatest impact for our clients. The areas that are not highlighted are areas that we can help assist by referrals and whatnot. But like I said, the bulk of business is happening in these areas that are boxed out here. Now, looking at this, you may think, where to invest? How did we choose these markets? And we've taken the time to vet out specific markets that we want to focus on. I think it's safe to say that not every market across the U.S. is a good market to invest in. So we've put together some key criteria that we feel support strong investment markets. Those are here listed on the screen, right? We want to have a strong job market, high rental demand, economic diversity, affordability, right? Something that we might run into here in Southern California, where the prices are, pretty high, and sometimes it may not make sense for everybody to buy here. Looking for good school systems, which is great. And then last but not least is, you definitely want to have reliable property management. You want to have the ability to interview a couple different people. You don't want to just be stuck in one city where there's maybe one person to help you, because in my opinion, property management is the make or break when it comes to real estate. It's only a 30-day or so escrow to close a property, but when you own it for 2, 3, 5, 10, 20 years, the manager is really the one that you're going to get really close with. So that's a little background of us and how we can help with real estate. And I'm going to be kind of closing out the presentation to explain what next steps would be if you guys wanted to look into exploring real estate, pending that you get a self-directed retirement account set up, or look forward to that. So before that though, I'm excited to bring up Dmitry Fomachenko from Sense Financial, who's been working with us for many years, and he'll be able to go into some more detail on all this. So Dmitry, feel free to take it away.
Thanks so much, Vince. Can you hear me okay?
Everything sounds perfect.
Okay, great. Well, thank you, folks, for joining tonight. And you can see my contact info here, which I will share again at the end of the presentation. And let me go ahead and jump in. So our mission statement, or our goal for our clients, is to help them obtain control and protect their retirement accounts. Proverbs 21:5 says, good planning and hard work leads to prosperity. And I know that all of you are hardworking individuals there, and you want your money to work hard for you as well. And we want to come along your side and help you do that. Before I explain each service that we offer and how self-directed IRA works, I just wanted to give you an example of one of our clients. Jason is a client, one of our early clients. He's from Tallahassee, Florida, and before coming to us, he had a couple of different retirement accounts, an IRA and a 401k. They were valued about $135,000. And he was looking at his statements and he was actually seeing the balances going down. So he was losing money in a stock market, and he was concerned about government even stepping in and taking over his retirement accounts because of the uncontrolled spending, which is a valid concern, and it doesn't improve. Since then, it's actually even become even worse. But he did some research online, found Sense Financial, give us a call, and spoke with us, and we set up a self-directed solo 401k plan for Jason, and he made these investments. He purchased a rental property within his 401k. He took a portion of the money and invested in his brother's private business. And then whatever money left over, he actually invested in a real estate note. So he became essentially, or used his 401k to become a bank and lend money to others. And so these investments producing about $1,000 a month in a cash flow for his retirement account, and he actually owns assets that do appreciate in value. As you know, real estate, but that house that you see right there probably doubled in value by now, if not more than that, because real estate goes up in value. It's been probably 9-10 years since he did that. So as you can see, this is kind of a I guess a 401k makeover, if you will. He had money in a 401k prison that he had very limited investment choices. We were able to unlock those funds for him, and he's now have the freedom to invest how he wishes, and his portfolio grown. His income, he has now residual income that passive income that his retirement account receives, and he's in much better control. So there are three options that I'm going to cover: a self-directed IRA, a checkbook IRA, and a solo 401k plan, which is known as a ultimate retirement plan. Just a quick comparison. So going back to these options, they're all self-directed. So they all giving you the ability to control your investment choices. So just a quick comparison between a conventional IRA or a 401k that most of you probably have and a self-directed one. So the conventional is held by a custodian, and the investments choices are controlled by the custodian. And so essentially your investment choices are limited to the stock market, stocks, bonds, and mutual funds. Typically, that's what you can invest in. This is just an example of the sheet. When I used to work and I had a 401k at my employer, a representative from the 401k will come in about once a year and had a meeting, and he will give us a similar sheet giving us investment choices. And so it was very, very limited, least confined to the stock market. Well, with the self-directed IRA or 401k, you have virtually unlimited investment choices. You can invest in residential real estate, tax liens and tax deeds, cryptocurrency, mortgage notes and trust deeds, in private businesses. You can invest in real estate internationally. I have clients who invested in Canada, South America, Japan, China, India, some other places. You can do that. You can invest in private business. You can do private lending and be a bank just like Jason did. And you can also do conventional investments such as stocks and mutual funds. Some people have this I guess, incorrect idea that self-directed is only for real estate. No, real estate is one of the most common investments that people make, at least my clients make with self-directed retirement account, but it's certainly not the only option. You can invest in virtually anything. So what is a self-directed IRA? Essentially, it is a tax-deferred trust account that is held with the IRS-approved custodian. You do need a custodian to have an IRA. And this type of custodian, they don't have the limitation for investment choices. They allow you to invest in non-traditional assets, but the problem is that majority of people out there not aware of the existence of self-directed retirement accounts, even though they've been around since 1974 and they designed to benefit people like you and I to save and put money away for the retirements per Internal Revenue Code section 408. Now, how it works? Well, first you have to open an account with the IRS-approved custodian. Then you fund it with the rollover or a transfer from your existing IRA or 401k. And the reason it is a transfer because in my experience, only very few people opened one up from scratch and finding it with the contribution, because contribution limit is very small for an IRA. It's only $6,000 a year. So there is not much you can do as far as alternative investments with $6,000. So typically an IRA started and funded with the rollover from existing retirement account. Next, you as the account owner, you direct the custodian how you wish to invest these funds. And you can direct them to invest in real estate, buy rental property, or invest in a paper asset such as trust deed. Okay, all of the income must go back into an IRA, and all of the expenses related to the investment. For example, if you own a rental property in your IRA, property taxes, insurance, repairs, and so on, they must be paid from the retirement account. Now, since you don't have direct access to your funds, you essentially have to go through a middleman, which is a custodian is. You have to tell them what you want to do. You have to provide them the instructions, and then they'll advance the funds to pay property taxes or insurance and so forth. And every time you do that, there are fees. Custodian is in business to make money, and they charge you a fee for every transaction and every asset you buy. So the two disadvantages in this model is that obviously fees are number one, and number two is that you don't have direct control. You have to go through middlemen. Some people find that inconvenient, and they seek for alternative options. And the alternative to that is a checkbook IRA. A checkbook IRA essentially allows you to bypass the custodian. So it's also known as a IRA LLC or IRA owned LLC. There is a special purpose LLC that is created, and it's created for one purpose: to be owned by the IRA. So you cannot use existing IRA. If you have one, you cannot use this, you cannot use existing LLC. You cannot use this LLC for any other personal investments or hold any personal property. It's purely to hold assets of an IRA. It does require IRS compliant setup and IRS compliant operating agreement. And again, the end result, it allows you to bypass the custodian when making investments and transactions. You can't eliminate the custodian if you have an IRA. Custodian is required, but you can bypass the custodian and gain checkbook control by making all of the investments inside of the LLC that your IRA owns. So how does it work? Let's look at the setup. So the initial processes or steps are similar. Number one, you open a new account with the IRS-approved custodian that allows alternative assets. Number two, or step number two, you fund it with the qualified transfer from the existing IRA or 401k or 403b or any other retirement account. And then that's where the difference is. A special purpose LLC is created. It's a single member LLC. Single member means that there is one owner of that LLC, and the owner is an IRA. You are not the owner of the LLC, you are the manager. Okay, so as a manager, you control it. Once the LLC is established and once your IRA is funded, you will instruct the custodian to fund that or to essentially invest your IRA money into the LLC. That's when the bank account is opened in the name of the LLC, because LLC is a separate legal entity. It has its own unique name and its own tax ID number. As a manager of the LLC, you control it, so you open a business checking account at the bank in the name of the LLC, and then IRA buys units of the LLC. That's when the funds are transferred from the custodial account into the LLC checking account. And from that point on, you no longer need a custodian, or your custodian is not in the picture. You invest LLC's funds directly from the LLC, and it can be done as simple as writing a check. Now, all of the income still must go back into the LLC checking account, not into the IRA custodial account, into the LLC checking account, because LLC essentially is the owner of the investments. And all of the expenses now can be paid by you from the LLC checking account by simply writing a check. So you don't have to go through the custodian and pay them fee per transaction, pay them fees per assets. You essentially control that. So again, the end result of this is you save on the fees, and then you also gain the control. You're able to bypass the custodian. Now let's take a look at the third option, which is a solo 401k. Well, solo 401k is known as the ultimate retirement plan, and it's designed under Internal Revenue Code section 401, subsection K, and it's defined as retirement savings trust. It's designed for self-employed individuals or small business owners. That's where the solo part comes from. So essentially, it's a simplified version of the 401k that larger employers might have, but because it does not have any other participants other than business owner and perhaps spouse of the business owner, then these plans are very easy to administer and very inexpensive as well. So it's not a new type of plan. They've been around for quite some time as well, but increased interest in these plans was as a result of changes in the tax law in 2002 that made all the benefits of the solo 401k so attractive. And we'll go over them in the next couple of slides. So these changes, they made these benefits so attractive and possible. But before we jump to benefits, let's talk about eligibility. Who is this for? So it's not for everyone. You have to be eligible to do a solo 401k, and you have to meet two criteria. Number one, you have to have a presence of self-employment or business activity. It can be in any form or shape. Okay, you can be doing it full-time, or you can do it part-time on the side. And number two, absence of full-time employees. You can have part-time employees working under 1,000 hours a year, up to 3 years, and if they're long-term employees working for you for more than 3 years, they cannot exceed 500 hours a year, because by law you will be required to offer them the retirement benefits as well. So that's the requirements. Okay, pretty much anybody can qualify for it, unless you own a business with full-time employees, because anybody can start a business. That's actually it's a good idea to maybe start a side business so that you can create additional income source. So let's take a look how it works. Well, Solo 401k basically requires that there will be a plan sponsor, okay? And the plan sponsor can be a sole proprietor. So if you just a self-employed individual working for yourself as a sole proprietor, you can be the sponsor. If you own a corporation or an LLC, so if you do have a legal entity, that entity can be the sponsor of the plan. But again, you don't have to have a corporation or LLC to establish the plan. You have to have presence of self-employment activity, and you can do it as a sole proprietor. Next, the solo 401k plan is created, and the plan sponsor, either you as a sole proprietor or your corporation, adopts the plan, and plan and trust are created. So there is a trust that is part of the plan. The solo 401k trust is the vehicle that, again, is part of the 401k plan, and this vehicle is designed to hold the plan assets. So just like in the previous example of a checkbook IRA, 401k trust is a separate legal entity. It has its own unique name, and it has its own IRS issued tax ID number. Now, similarly with the previous example again, where as a LLC manager you control LLC, here you are actually the trustee of the 401k trust, and as a trustee you control the assets of the plan and all the investments. So you will be able to open a business checking account at any bank essentially, or financial institution, or a brokerage, or credit union. And from there, again, you can make investment as simple as writing a check. The same applies. You cannot commingle your 401k assets with your personal assets or finances or your business finances. You have to have it kept separate. That's why you will need a separate checking account and separate set of books. But you control it, and as a trustee, you are, again, all the investments are held in the name of the 401k trust. All of the income goes back to the trust bank account, and all of the expenses are paid from that account. You have full control. There is no need for the LLC here, and there is no custodian at all. So it's a lot simpler. It's much quicker to establish, but again, not everyone is eligible for it. Now let's take a look at the benefits. Well, one of the most compelling benefits that solo 401k offers is the high contribution limits. For this year, the maximum limit that can be contributed to solo 401k is $67,500. Well, that's 10 times higher than an IRA. So that's pretty significant. It's a great tax shelter. If you own a business and you make good income, you're paying a lot of taxes, and this is a great way to minimize that tax liability. Next, loan feature. Solo 401k actually allows you to borrow up to $50,000 or 50% from your account, whichever is less, for any reason. You can take a loan and you can use that for any purpose. It's like you essentially creating your own bank that you can tap into at any time. You have that at your disposal. You may or may not use it, but it is there available for you. Certainly nice to have. Next, ROT type contributions. Well, with the solo 401k plan, you have the ability to make contributions after tax into a ROT account. You can have a separate account, and you can pay the taxes up front and then contribute into that designated ROT account. So compare that with the ROT IRA, which is only $7,000. So you can do, it's much higher contribution, and it's not tied to your there is no income limitation. With ROT IRA, to make contributions, you have to essentially be in a certain income limit. If you're over that, then you're not eligible to contribute. That's not the case with the a Roth 401k. Regardless of your income, you can still make contributions. And it also offers you checkbook control because there is no custodian in there. It's very cost effective. There is no custodian, no LLC needed. You as a trustee control the plan. And that also, you can double the benefit if your spouse is also involved in the business. Then your spouse can also participate and take advantage of the same benefits. Next benefit that the solo 401k plan is exempt from unrelated debt finance income tax on leveraged real estate. So essentially, if you buy real estate using leverage in an IRA, the income that that leveraged portion of the real estate produces will be considered unrelated business income and subject to the UBIT tax. Well, solo 401k is exempt from that. So just another reason to use this vehicle to invest in real estate using leverage. This credit goes to my daughter. She did that many years ago, but Ecclesiastes 11:2 says, divide your portion to 7 or even to 8, for you do not know what misfortune may occur on earth. And I think, folks, you've seen that to some degree in the last couple of years, right? How things been really shaken and changed just with this pandemic, how it affected the stock market and many other industries. So if you are only invested in a stock market with your IRA, you may end up just like this man who the bottom of the basket fell off and all of the eggs were broken. And wife says, well, I thought our investments were diversified. Well, not if they're all in the one basket. You know, you may have different investments, but if they're all tied to a stock market, then you're in one investment asset class. You do want to have a diversification. You need different asset classes, and the self-directed 401k or an IRA allows you to do so. So self-directed means unlimited investment choices. Again, you can invest in real estate, residential and multifamily and commercial. You can invest in precious metals, gold and silver. You can do hard money lending. You can invest in trust deeds. You can invest in a private business or invest in tax liens and so much more. Now let's we talked about how much you can do, but let's talk about some of the limitations. The Internal Revenue Code 4975 spells out prohibited transaction rules. And according to the IRS rules, your retirement funds cannot be invested in collectibles. Anything that is considered collectible, like stamps or coins or collectible cars or artwork, anything that is considered collectible, you cannot invest your retirement funds into. You cannot invest your IRA into life insurance, and also you cannot invest in the S-Corp. Now, if you own an S-Corp, you can certainly be eligible for a solo 401k. You just cannot invest your IRA or 401k money into somebody else's S-Corp, because you have to be a natural or person to invest that. C-Corp is fine. So again, just want to make sure it's clear. If you own an S corporation and you have no full-time employees working for you, you can establish a solo 401k plan. You're eligible, but you won't be able to invest in another S-Corp. The same section also spells out disqualified person, and disqualified person essentially is the owner of the account, IRA or 401k, and his or her spouse. Also linear ascendants and descendants, okay? And any business entity in which any of these owns 50% or greater interest. So none of your retirement account cannot be engaged in a transaction where any of this is involved. So none of them can be involved in the transaction. So let's take a look at that a little bit more details, and let me give you some examples. So a prohibited transaction can be a sale, exchange, or leasing of a property between a plan and disqualified person. If you end up buying a rental property, let's say it's a vacation rental, in your 401k or an IRA, you personally cannot stay in that property, cannot use it, regardless whether you pay in market rent or not. It's a transaction between a plan and disqualified person, cannot do that. You cannot rent it to your parents or to your child, because they also will be considered a disqualified person. Lending of money or other extension of credit between a plan and disqualified person. So the IRS rules do not allow you to provide a guarantee for a loan, and therefore any loans, if you use leverage, has to be non-recourse. I believe we have a slide on that. Providing goods or services or facilities between a plan and disqualified person. One example or a couple examples: if you're a handyman, you cannot work on a property, that will be considered providing services or goods. If you're a real estate agent, you cannot be an agent in the transaction. You cannot represent your 401k in a transaction. You're not allowed to transfer to or use for or for the benefits of a disqualified person income or assets of the plan. Any disqualified person who's fiduciary, or he deals with the income or assets of a plan for his own interest. It has to be for the interest of the 401k. And you cannot receive any consideration for your own personal account by any disqualified person from any party dealing with the plan in connection with the transaction. Again, example will be being a real estate agent and actually doing or handling the transaction for your 401k, and you cannot receive commission. So you cannot receiving compensation will be prohibited, and also acting as an agent, that will violate the first class. Now, buying real estate inside of your retirement account is very straightforward. All the income and gains generated are sheltered from taxes. They're tax deferred. You will pay taxes at a future rate rather than in the year when the investment produces income. Thus, you're able to take advantage of the compounding interest. All the income and gains inside of a Roth 401k are tax-free, and again, income must go back into the account and expenses must be paid from the account. Cannot take any income for your personal benefits or use, and you cannot use your personal finances to pay for the expenses of your IRA or 401k. I did touch on this question, but it is often asked, can I finance real estate inside of my IRA or 401k, or should I just pay or only pay cash? You can provide, you can use financing, but you cannot provide the personal guarantee. As we've seen in the previous slide, that is prohibited. Therefore, loan must be non-recourse. And non-recourse means that you personally do not provide the guarantee for the loan. The property is the only security for the loan. So it's a high risk for the lender, therefore they require a higher down payment, typically 30 to 40% down. And they do require that property must provide sufficient cash flow so it will pay for itself. They will require 10 to 15% of the purchase price and reserves. Inside of an IRA, it will trigger UDFI tax. 401k is exempt from that. And most banks don't do this kind of loans. So mortgage companies and banks, typically they will require personal guarantee, but there are a handful of banks who specialize in this, and we do have a list of those on our website, and you can certainly easily can get financing if the property qualifies you can get financing. Even if property doesn't qualify, there are plenty of private lenders, and Marshall Reddick, by the way, specializes in that. They do offer non-recourse loans to IRAs. Well, here is just a quick side-by-side comparison between the three options that we discussed. All of them offer non-traditional investments. You do need a custodian for an IRA. Solo 401k, there is no custodian. You do get a checkbook control with the IRA LLC, or Checkbook IRA is another name for it, and solo 401k comes with checkbook control as well. The custodial IRA, you have to pay transaction fees and asset-based fees, not with the checkbook IRA and a solo 401k. Another disadvantage of the checkbook IRA or IRA LLC is that depending on the state, there might be fees for the LLC. So keep that in mind. You can take a personal loan only from the 401k, cannot borrow from an IRA. And if you use leverage to finance investment property in an IRA, you may be subject to unrelated business income tax. Maximum contribution to an IRA is $7,000 and 401k is $67,500, almost 10 times higher. Again, great tax shelter if you're the right person. Solo 401k is the only one that has a built-in Roth component. So you can have a designated Roth account within a plan. So it's a separate account, but it's under the same umbrella, so to speak. And you can have both pre-tax and after-tax funds. Anybody can do an IRA, but solo 401k is not for everyone. Self-employment is required to qualify for a solo 401k. I know it's been a lot of information that kind of been crammed into this short time here. And I know everyone's situation is different, so I do offer complimentary consultation to all the attendees. You can go to this link, or you can also find it on our main site, sensefinancial.com, on the homepage. If you scroll down, you'll see a link to my calendar there, and you can schedule 15-minute consultation one-on-one with me, where we can go over specifics of your situation, answer your questions, and maybe even discuss some of the strategies. As promised, my contact info is on your screen. Write that down. Reach out to me, give us a call, or you can shoot me email directly to my email address written here, and I'd love to chat with you about your situation and again, brainstorm and help you. I'm not only doing this, I'm practicing what I'm preaching. I've been investing using retirement accounts for both me and my wife, and probably, you know, by the way, I do primarily invest in private lending. That's what I use my retirement account for, and grown that just beyond my imagination over the years, and happy to help you do the same as well. Vince, so that will be it. I think you may have a couple more slides there, right, that you want to cover?
Yeah, absolutely. Thanks so much, Dimitri. That was amazing. And I know for a lot of folks, there's a ton of information and probably a lot of questions. So what I'm going to be doing following up is tomorrow and the next day, I will be reaching out to all of you folks that attended, and we'll be setting up calls with you guys, right? And basically trying to field any questions, getting you in touch with Dimitri. But ultimately, you know, this is what you can expect from a call from us, right? These calls can be as long or as short as you want, but we basically want to know the who, what, when, where, why, and how, right? So if it is actually investing in real estate, you know, why, we want to figure out some goals for you, how you plan on doing this. Is it going to be in a traditional, you just want to buy a property, you know, in your own name? Do you want to use a retirement account? When, right? Is it something this year, next year, depending on your taxes? criteria of the property, where, what markets, and then introducing all the key players. So for example, like looping in Dimitri, or maybe Patrick from our private lending department, or whoever, right? Insurance, property management. It's getting all of those folks in line. So that's what you can expect from a call from us. I will be making those calls tomorrow and the following day. This is also my contact information. So if you guys have any questions directly, or want to reach out prior to me giving you a call, you can always set, we can always set something up now. But I know there's so many, there's probably a few questions out there, and I saw some come through. So when I do reach out, I'll keep these in mind. It's just that questions are oftentimes very specific to a situation, and it may be better to kind of handle these on a one-on-one. So again, guys, we appreciate everybody's time here tonight. Dimitri, again, thank you for taking the time to go over this with us. And yeah, want to thank you, and I'm sure we'll be in touch with you soon with a couple clients.
Thank you for joining.
All right, guys, good night.